traders. This is our weekly gold review. My name is Angelo Zitis, and we start with this week's title being Gold Safe Havens Are in Demand. Gold prices rallied in the latest sessions after having a very active previous week, with the momentum keeping up in today's early Monday European session. In the previous days, gold was fueled by the latest FOMC meeting, the US Sino trade developments, and global economic weakening conditions, which point to a possible slowdown. Our first point for today is the Fed could be a big question mark in the following months. Starting with the FOMC, that cut rates by 25 basis points as was widely expected last week. In the Federal Reserve statement, job growth, low unemployment, and household spending had improved and were all seen as positive. Yet, inflation pressures did not react as expected and remained rather lower than the 2% target, while the statement also referred to a softening business fixed investment. Furthermore, the Fed made it clear that the rate cut was based on the lower inflation rates and unresolved global economic circumstances. Despite the rate cut, our view is that the Fed will remain in a wait-and-see position in order to form future decisions. We do not support the opinion that the Fed has a clear roadmap for its interest rate to remain on hold or change in any case. That could also be the reason that gold traders chose to dump the precious metal upon the release of the decision and statement, as it may have appeared to them that another rate cut is not guaranteed. This contradicts most market participant beliefs that the Fed has already planned for another rate cut in the coming months. Our opinion is that the Fed is aware that the global economic and fundamental matters remain questionable, and that these matters could change course unexpectedly in any direction. This has been keeping them constantly searching, monitoring, and reviewing the implications to be able to form accurate views and opinions. Gold traders that realize that the Fed could be a big question mark in the following months may tend to keep their bullish gold positions in place, maintain higher price ranges, and sell when and if an opportunity arises. The direct hedge instrument for gold, the greenback, had strengthened upon release of the FOMC, yet in the following sessions it weakened and corrected at lower levels than it was prior to the Fed meeting, which leads us to our next subject. Gold jumps on new tariffs. On Thursday, the US imposed further tariffs on Chinese goods worth $300 billion starting September 1st, creating further breaches in the relationship between them and the Chinese. The happening boosted gold prices as the shiny metal managed to regain the ground it lost in the previous day, but also climbed some 40 USD in value on the day. This scenario was foreseeable and noted in our previous gold report. We stated that any hesitation from the Chinese side would not be accepted from the US, and the only weapon they have is tariffs. Even though the tariffs have been a very effective weapon for the US in the trade wars, tariffs cannot be everlasting. This is now empowering the Chinese side that announced it would be fighting the US on the new imposed levies. China's new ambassador to the United Nations, Zhang Yun, went as far as indicating the cooperation the US and China had on the North Korean deal could be jeopardized. In our view, China has had enough and will be looking for any possible way to get even with the US. If the new tariffs are enacted, then the Chinese may suffer. Yet, they would have already been through most of the negative effect during the past 1.5 years. Therefore, we expect them to retaliate by any means necessary and on any range of matters. Between many actions, the Chinese could be slowly targeting US companies operating in China and trying to make it difficult for them to continue to use the lucrative Chinese market. By strategically targeting these US firms, many believe they will eventually hit a weak spot and get the required attention they desire. How long can the US remain unaffected by global uncertainty that starts from imposing tariffs on China? These are valid questions that have led traders in demand for safe havens. Today, gold is trading above $1,450 per ounce, as the situation is seemingly worsening, and many believe the new tariffs could be the reason the US Federal Reserve to cut interest rates to protect the US economy from trade policy risks. Our third point is, what will gold traders be looking at this week? Finally, and as expected, various US stocks have come under strong selling after the announcement of the new tariffs. Among them, Apple Inc. dropped 2% on fears that the firm, accompanied by many others, will be reducing their earnings due to the matter in the near future. In general, a huge sell-off was observed in the US indexes in the previous days, which can lead us to believe that investors and traders losing money in the stock market could be turning to gold to cover for losses or make short-term gains. Traders should be aware that further sell-offs in the stock market could lead to further gold volatility. Moving now to our technical analysis, this is our 4-hour gold chart. Now the precious metal is currently trading nearby our 1460 US dollar per ounce, a price last seen back in May 2013. Since gold has broken above all our previous resistance levels, we are forced to look higher and contemplate the next possible stops if the upward momentum is to continue. Since traders haven't seen this price range in years, they could be aiming for round numbers. So we start first with our R1 1470 level. Above that is our R2 1485 level, and even higher is the R3 1500 round number level. In the opposite direction, if the precious metal is to break below our S1 1450 level, the next stop could be our S2 1435 level, and even lower we could see it stop at the S3 1425 level. We will also like you to take note of our RSI indicator at the bottom of the chart, which is currently running through the 70 level, which could imply that long positions are stacking up for the precious metal. We would like to note that with the latest bull run, the shiny metal is in a clear incline momentum. Now, if you've heard something in this report that you found useful, make sure you apply it to your trading. Thank you very much. We'll see you next week, and solid trading.